All right, hello. This is Reuben again here with another real estate market update for Kitsap County. What we've got going on in this segment, this episode, we're going to take a look at the usual market trends that we have going on over here in Kitsap County. Then we're going to take a look at review the mortgage rates that's we've got happening, um, and got a program here, John L. Scott relocation program, and then gonna do a quick overview of the current update from the National Association of Realtors. Um, so we're gonna go ahead and get started on this one. So we have here we have the you have to excuse these numbers here, they're kind of colliding with each other. Um, so we have here the current trends. As we can see, we're as summer, spring kicks in, you can see that we're kind of following actually a better trend. Because in last year, in at the end of February, you can see you had this dip coming in, whereas this year there's no dip this time. So hopefully this trend will keep going up. I'll bring these numbers back up. So by the end of January, we had 250 new homes that came on the market last year, and then this year, so we eclipsed that by six at the end of January. Now, for February, we had there was 219 new homes that came up on the market. So we're up to 273. So we're probably going to see this number here, this 341, go up higher for homes that are for sale at the end of the month. And remember that this number only reflects the homes that are for sale at the end of the month. So if a home comes on the market and then goes off the market prior to the end of the month, it will not show up here. But that's not quite as it's not quite as an impact as it was just a few years ago when houses would barely stay on the market for like 2 weeks. We are seeing, and I'm presuming that this is, as you can see, was a trend of buyers going up, or as sold homes, and this is a reflection of the number of buyers that are in the market. So right now we're staying pretty level here, 196, 185, 190. So we're not seeing a whole lot of buyers on the market, and that I'm guessing, I'm wagering that's because of the current interest rates and the housing prices, which is going to lead us to our next one. So our average price per square foot. It's still kind of coming down a little bit from the summertime. We are still sitting around it's not a huge difference, 284 to 271, 279, 271. It's not a huge difference on that one. Number of days on market. So we have here the sale with original listing price. So the homes are still taking a bit of a haircut on their sale. So like on average, we're looking anywhere between 2 and 5% currently for how much prices are having to come down from their original listing price. And then the average cumulative days on market is 52, so we're still under 2 months. The healthy, typically over history, it's been like 3 months. 3 months would be an average market. Let's see here. I'm gonna switch this to medium price sold. Maybe. No, we can talk about this one. Um, and so we have the median price, and when you the difference between the median price and the average price is that the median price takes like the top half and the bottom half, and then it just, instead of averaging the two, you just look at the direct number in the middle. And what that helps to do is it kind of like cuts out, it helps prevent the extreme ends from skewing the prices, where like the average will be influenced by uh, dilapidated houses that go to a like an investor, or the higher end, $1 million jumbo loan houses that go that or like stuff that you would find on shorelines and whatnot, waterfront houses. And the median will actually kind of chop that out, so we can see that our median price has come down from 548 to 503. Whereas the average, as you can see, the average is higher. Uh, and so the average prices that are sold is, this would be indicated that there's some higher value properties that are being sold that are bringing this price up. But on average, you could expect about 542,000. I think you're still sitting around the 500,000 mark for home values, which interestingly enough, it's actually been coming up. Uh, you know, for sale home prices are coming up, and while interest rates are not going down, which is not really helping anything at all. Which will, explain when we go back to here, and you see that this line here has been pretty leveled out. Uh, and this is here. This is houses that are up for sale, and so, which is why, as you can see, these houses that are up for sale, when these houses do sell, these are the pricier houses that stay on the market a little bit longer. So when they do sell, they're what's bringing this line here up from the median price. So it's these numbers up here that are pulling the average prices up. All right, and so months of inventory, like I said, we're still sitting around like less than 2 months. 2 months inventory, that's staying fairly consistent. We've been going between like 1.2 to 2.1. So remaining around 2 months, which is still considered a seller's market, just not as much of a seller's market. So that's going to conclude this segment. Let's talk about the mortgage rates. So previously I'd been using the Fred mortgage rate, but that's only limited to the stuff that Freddie Mac, the mortgages that Freddie Mac actually puts out. Decided to start showing Zillow's because that covers a much broader range of mortgages, because that'll take it, pretty much almost the entire country, or a good sample across the entire country, not just what Freddie Mac issues. So the national 30-year fixed mortgage rate goes up. It doesn't go down. It's gone up to 6.54. The current average 30-year fixed mortgage rate climbs 11 basis points from 6.43 to 6.54 on Monday. And is this? Yeah, I guess so. That'd be today. 30-year fixed rate as of April 1st is up 10 basis points from the previous week, 6.44. Additionally, the current national average for a 15-year fixed mortgage rate increased 14 basis points. So 5.67 to 5.81. So you're going to save yourself some, not only money on the interest, but over the duration of the loan, if you can afford a 15-year rate. You're going to be paying a much higher monthly payment, a significantly higher monthly payment to get that get that down from 30 years to 15. But you're going to have a lower rate. So if you can swing that, that's going to save you some money in the long run. The current national average 5-year adjustable rate mortgage is up 7 basis points from 6.59 to 6.66. Tell you, I've been seeing that number way way too many times. That's okay. Uh, and so if you come into, if you just plug in like uh, Zillow's mortgage rate, and you want to take a closer look at this information, if you're considering purchasing, you can adjust your credit rating. So this number was for the 740 or higher, which is going to be your prime rate, and then 680 to 740. It's going to make, and then how much ever you have down. It doesn't look like it's changing a whole lot. I mean, it does make a difference. Like if you take a look here, 6.67. If you switch it down, 6.76. So, and then they have more information here. It explains what their that basically just gives details on this. It's good. It's a good article. I'll go ahead and keep this one in the description. So this is a service here, this relocation service that John L. Scott provides. This is really for anybody who's traveling out of state. Like if you're traveling into Washington, here within the Puget Sound area, I'd be more than happy to help you find a house here. And if you haven't purchased a house, like in any modern time, there's plenty of Zoom videos that we could do. I did a lot of those when I was working under Redfin, and it very helpful. We can just schedule it up, and you don't even have to leave your house, and it's about as best as you can get from the comfort of your own home for a guided tour. But yeah, if you're leaving outside of Washington, or even you just going to any other state and you would like help finding an agent, the agents under the relocation program, and it's not just limited to John L. Scott. This is just branded to John L. Scott. But the agents that are registered under the relocation program are very, very well experienced agents, and typically come with like high ratings, and can be very trustworthy. So yeah, that's a nifty little program that John L. Scott provides. If you are planning on moving into an unfamiliar territory, an unfamiliar state, go ahead and drop me a line, and I will more than happy to help you get set up with it, finding an agent, help you find a home. Alrighty, now finally, this is kind of the big one for anybody who does follow the NAR activity, who's not a member. Then this has kind of been big news in that regards. I'm not going to go over the entire article, but I'm just going to kind of hit the first paragraph, and then get to the meat that will actually affect the consumer and our customers. So the National Association of Realtors, NAR, today announced, and this happened on March 15th, announced an agreement that would end the litigation of claims brought on behalf of home sellers related to broker commissions. This agreement would resolve claims against the NAR and over 1 million NAR members, all state, territorial, and local realtors associations, and all associations owned by the MLS. All brokerages with the NAR member as a principal that had residential transactions in transaction volume in 2022 of 2 billion or below. So it is subject to court approval. So they've reached an agreement, but the court does have to approve it. And if the court doesn't approve it, well, I guess the litigation continues. So you've got the next several paragraphs is just make NAR making statements and whatnot. The kind of the meat in this, let's see here. In addition to a financial payment, NAR has agreed to put in place new MLS rule prohibiting offers of brokers' compensations on the MLS. Now, I think pretty much like almost all multiple listing services also are NAR members, which personally I think that NAR has gotten a little bit too large. They're for a lawsuit like this to have such a national impact. Unfortunately there's not. They're just a nonprofit organization, but they're the only ones who people go to. There are other kind of like real estate organizations, but they're not that big. They're not that well known, and so this is what we're with, and many agencies, many firms require their members to actually be a member of the National Association of Realtors. Like Redfin, Windermere, mine, John L. Scott, Remax. Pretty much all the really large ones require their agents to be NAR members. Personally, I don't necessarily agree with it. It's akin to joining a company that's unionized and being required to be a part of the union. Like here in Washington, we are what's known as a right to work state, where you can join a company. Like if I was to go get a job over at Boeing, I wouldn't necessarily have to be required to be a part of one of the unions that operate under Boeing. But that's just kind of the way it is right now. So in addition to this final payment, NAR has agreed to put in place new MLS rules prohibiting offers of broker compensation on the MLS. Now, and people have been coming up and asking me about this. This is not saying that and it explains it. This would mean that offers of broker compensation could not be communicated via the MLS, but they could continue to be as an option consumers can pursue off MLS through negotiations and consultations with real estate professionals. And we've seen our MLS and the Washington Association of Realtors has adjusted their contracts to kind of reflect this. Offers of compensation help make professional representation more accessible, decreases the cost of home buyers to secure these services, increases fair housing opportunities, and increases potential buyer pools for sellers. They are also consistent with real estate laws in many of the states that expressly authorize them, which if a seller decides to accept a buyer's offer and that buyer is using a veteran affairs loan, a VA loan, that seller is required to pay the buyer broker's commission. It's by federal law. And also, as it was pointed out here, which it baffles me as to how they couldn't argue, like make an acceptable argument for this in court, that when the seller offering to pay the buyer broker's commission, that alleviates the burden from the buyer and, as they say, creates a larger buyer pool for the sellers, because buyers, especially for first-time home buyers, they put everything they've got into their down payments, all their closing costs, and to be able to secure the the loan. And it's if a buyer, if a seller is not offering buyer brokers compensation, then that's going to chop out a good chunk of buyers who just can't afford to cover their broker and cover the the cost of like the closing costs and down payment costs. So there is that. Let's see here. Further, NAR has agreed to enact a new rule that would require MLS participants working with buyers to enter into a written agreement with their buyers. NAR continues, as it has done for years, to encourage members to use buyer brokerage agreements that help consumers understand exactly what services and values will be provided and for how much. These changes will go into effect mid-July 2024. Well, here in Washington, Washington State enacted this law. See, I don't remember if it was actually a law. I think it may have actually been a law. But at the very least, it's on our multiple listing services, the Northwest Multiple Listing Services. We are now required to do it. We can't. So one way or the other, we can no longer represent a buyer without an agreement in place, which is fine. People like to keep things simple, and the more bureaucracy that you put into stuff, it can hamstring. But on the other hand, it is important for clarity, especially under legal litigation, if that comes up in the future. Let's see here. Ultimately, continuing to litigate would have hurt members and their small businesses, said Mrs. Wright. While there could be no perfect outcome, this agreement is the best outcome we could achieve in the circumstances. It provides a path forward for our industry, which makes up nearly 1/5 of the American economy, and NAR. For over a century, NAR has protected. Well, let's go back here. Continuing to litigate would have hurt members and their small businesses. I'm not exactly certain as to how the continuation of the litigation would do that, unless they thought that they were going to lose out hardcore at the end of the litigation. Which I kind of suspect that may be the writing that they were seeing on the wall, that, aside from dragging this out into a longer effect, that they were they were seeing that it was just going to be a losing matter, so they tried to just cut everything off, cut their losses with this. So, but we'll see what if the judge accepts it. And I remember reading back when this was in its early stages. Originally, RElocation was named on the lawsuit, and they actually turned against the NAR in this situation, and they released a statement siding with the plaintiff, which I found rather interesting. But back to this, and personally, I think that the people who brought this lawsuit were basically just looking for a payout more than they were looking to resolve any actual problem. Because I can guarantee you that these folks took advantage of that buyers, like when the people that brought forth this lawsuit, when they purchased their very first house, they would have not had to pay their buyer's agent unless they purchased it long before these rules, or I don't know rules, but yeah, basically these rules came into effect. But for any buyer coming into the market today, they wouldn't have been paying their buyer's agent, and then when they sell that house, if they sell that house, they would that is basically when they would be paying a buyer's agent. It would be somebody else's buyer's agent, but it's what it is a deferred expense. You may not pay it on the buy side, but you would end up paying it on the sell side. And then in turn, if you were to move somewhere else and purchase another house, you would then gain the benefits of that transaction, the buyer's transactional side. So Um, I find it very short sighted, which is why I'm surprised that um, the NAR was not able to paint a proper enough picture as to how this works to the court. But you know, I guess it is what it is. Um, let's see here. It provides a path forward for our industry, which makes up nearly one-fifth of the American economy. Let's see here. NAR has protected and advanced the rights to real property ownership in this country, and we remain focused on delivering that core mission. Well, I would say that that's actually false, because I watch year in and year out, especially like over here in the Puget Sound and Seattle area, that property owners' rights are continually being eroded, and I never hear a peep out of the NAR or the Washington State Realtors or even some of the local like county-based ones that when cities and states make a proposal that would erode more property rights, I never hear anything about even like submitting a letter saying don't do this because you're eroding you're eroding property rights. I would wager that if somebody actually audited that statement, they would find it to be categorically false. So, going into this, NAR exists to serve our members and American consumers, while the settlement comes at a significant cost, we believe it benefits will provide our industries are worth the cost. Honestly, I don't think it's really going to change the industry a whole lot. I mean, aside from it, like aside from requiring buyers to have an agency agreement, which I mean, personally, I did that anyways with my buyers. I would not go into any agreement with a buyer without a buyer's agency agreement, so it doesn't affect me at all. Um, but person like at the end of the day, I don't think it's really going to make a huge upheaval or make a serious change uh, within the industry, the real estate industry. But we'll see how it turns out at the end. NAR is focused firmly on the future and on leading the industry forward. We are committed to innovation and defining the next steps that allows us to continue providing unmatched value to members and American consumers. This will be a time of adjustment, but the fundamentals remain. Buyers and sellers will continue to have many choices when deciding to buy or sell a home, and the NAR members will continue to use their care, skill, and diligence to protect the interests of their clients. Um, yeah, and I would wager, I'd state that statement. There are a lot of agents out there, that you get a large enough number, and statistically speaking, you're going to have some bad apples in there. But there are plenty of non-NAR members that will provide skill, care, and diligence to protect the interests of the clients, because that's called customer service. Providing quality customer service and maintaining everything above board. You don't need to be an NAR member for that, and so I think that the NAR would be a completely different, would not be nearly as impactful when things like this happen if these larger firms did not require their agents to actually be a part of their the NAR. Um, so the National Association of Realtors is America's largest trade association, which again, it's getting. I'm not. I was never a fan of like large anything. It becomes too unwieldy and it wields too much power and influence. Um, Representing more than 1.5 million members involved in all aspects of the residential and commercial real estate industries. Okay, so this is basically just another some more corporate speak. So that's my thoughts on it. I think in the end, it's not really, at least here in Washington State, it's not going to make a change in the landscape, um, provided that if this agreement stands. If the judge approves this agreement, if they don't approve this agreement, then I guess we'll find out at the end of the litigation as to what happens. But that is all I have for today. Thanks for tuning in, and I look forward to the next one. Bye.